The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by LevelTradingField.com, the online communication, research, and quantitative platform with the largest collection of financial tools for traders, including the innovative Bitcoin Market Predictor. The Bitcoin Market Predictor is a simple prediction game where 10 people place bets on the future price of Bitcoin, and the top 3 most accurate predictions wins. Sign up at LevelTradingField.com with promo code INSIDER. The Options News Rundown is also brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning, traders. This is your Options News Rundown for Tuesday, February 27th. Our first story today comes from CNBC. The stock market's multi-day sell-off a few weeks ago reignited Jim Cramer's battle against risky volatility-related exchange-traded products that were responsible for the brutal decline. Quote, "I'm calling on Congress to investigate these instruments," said the host of CNBC's Mad Money on Monday. "I'm calling for the SEC's enforcement arm to look into whether there was culpability and manipulation. While the Corporate Finance Department of the SEC should re-examine the reasoning behind allowing exactly these kinds of products to be there in the first place. These products allow investors to effectively bet on the CBOE Volatility Index, or the VIX, which measures expectations of near-term volatility as conveyed by the S&P 500 option prices. When volatility is low, the returns on these products, often exchange-traded funds or exchange-traded notes, are bountiful. But when the VIX spikes, owners of these products become forced to shed their positions to compensate, sending stocks reeling. Cramer has railed against these products for years, and on Monday he weighed the consequences of getting rid of them for good. What could really be lost, he asked. Okay, some fees, maybe some strategies that failed, he said. But what will be gained? How about this? How about a restoration of the integrity of the system? A system that's been challenged yet again by instruments that should have never been created. Next up is a story from Reuters. Federal Reserve Chairman Jerome Powell is pledging to, quote, strike a balance between the risk of overheating economy and the need to keep growth back on track. He told U.S. lawmakers this morning that the central bank would stick with the gradual interest rate increases despite the added stimulus of tax cuts and government spending. Fed policymakers anticipate 3 rate hikes this year, and Powell gave no indication in prepared remarks to the House Financial Services Committee that the pace needs to quicken, even as the, quote, tailwinds of government stimulus and a stronger world economy propel the U.S. recovery. The FOMC will continue to strike a balance between avoiding an overheating economy and bringing price inflation to 2% on a sustained basis, Powell said. Some of the headwinds of the U.S. economy faced in previous years have turned into tailwinds, he said, noting recent fiscal policy shifts and the global economic recovery. Still, inflation remains below our 2% longer-run objective. In the FOMC's view, further gradual rate increases in the Federal Reserve rate, or in the Fed funds rate, will best promote attainment of both of our objectives. The testimony said Powell's firm's first signal as Fed chief that the massive tax overhaul and government spending plan launched by the Trump administration will not prompt any immediate shift to a faster pace of rate increases. Gradual has been the operative word since the Fed began raising rates under Powell's predecessor, Janet Yellen, in late 2015. Our final story today is from MarketWatch. Gold prices headed lower on Tuesday, on track for their biggest single session decline in a week, as investors look to Fed Chairman Jerome Powell's congressional testimony for clues on the interest rate hikes. Gold's loss would be larger if not for durable good owners in January, which showed a bigger than expected decline of 3.7%. Gold prices did briefly fall to 1,325 as separate data showed February consumer confidence climbed to its highest level since November 2000. While inflation worries could spur safe haven gold by rising interest rates would pressure the metal because bullion pays no interest. Expectations that there could be an additional rate hike helped to push the 10-year yield closer to 3% last week, though that yield has seen a pullback in recent days. This morning, the yield on the 10-year note edged up to 2.867% from 2.862% late yesterday. That's all we have for today. You can find all of these stories and more on theoptionsinsider.com. I'll be back tomorrow with more options news you can use.
The Options News Rundown is brought to you by LevelTradingField.com, the online communication, research, and quantitative platform with the largest collection of financial tools for traders, including the innovative Bitcoin Market Predictor. The Bitcoin Market Predictor is a simple prediction game where 10 people place bets on the future price of Bitcoin, and the top 3 most accurate predictions wins. Sign up at LevelTradingField.com with promo code INSIDER. The Options News Rundown is also brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.